Hello from Trend Signal for a review of the data and events the week beginning the 10th of December. Global stock markets on Monday morning certainly remaining weak. Concerns about the US economy, the US-China trade war that is now unlikely to end anytime soon following the arrest of this Huawei official in Canada. Markets last week, certainly equities were under pressure. Ironically, the FTSE probably the least affected, down 3%. The Dow down 4.5%, S&P similar, down 4.6%. The DAX shedding 4.2%, and the Nikkei just over 3%. All started positively last week, but concern grew about the progress or the lack of progress between Trump and Xi Jinping of China, really the China-US trade war. The tech stock slump continued last week, with the likes of Apple falling a further 5.5% from the previous week's close. Banks seem to have joined the club now, certainly under pressure midweek last week as the yield curve in the US flattens further. Bank margins are cut further. Talk of this flattening yield curve, technical in nature, but the fact is the last 10 recessions have been predicted by flattening or inverted in inversion of the yield curve. That's where the yields on the 2-year bonds are higher than those of the 10-year bonds. They've also actually indicated a recession on occasions when a recession did not follow. But the fact is they are a good barometer. Either way, investors now believe that the likelihood of a recession in the next 12 to 15 months have increased. Other markets last week, the currencies, certainly the dollar was weaker last week, certainly from mid-week. Missing consensus on non-farm payroll on Friday didn't help. Gold popped up last week on the back of the arrest of the Huawei official, and also the fall in the dollar from Wednesday also helped sentiment there. Brexit is quite a pig's ear, really, as some have described, a position that the UK or we find ourselves in. Sterling actually is ironically stuck in a narrow range, albeit slightly bearish trend, but that could all change on Tuesday with the Brexit withdrawal vote. The vote in the Houses of Parliament. It looks almost certain that Theresa May is going to lose this vote, and the House will vote against her proposal. The government is likely to be short by 80 or 90 votes, and those really can only come from within the Labour ranks, bearing in mind that the Labour Party does not support the deal. This seems very unlikely, and it's really what happens next that matters. Any and all options are on the table, but depending on the scale of the defeat tomorrow, Sterling and Theresa May could well suffer a fall. The options, well, there's just lists of them. Maybe we have a second referendum. That seems to be a preferred option, and more so now. I note on the Financial Times that there has been an announcement that the EU's top court rules the UK can unilaterally end Brexit. So that'll put a little more thought into the process as well. Maybe we adopt a Norway plus deal. Maybe there's a general election, change of leadership. How that's going to help, we're not sure. And maybe a change of leadership in the Conservative Party. Maybe Theresa May goes back to Brussels to sort out the backstop. There are flaws and weaknesses in all these scenarios, not least because Brussels will not consider a backstop. Change of leadership in the Conservative Party, what's that going to achieve? A general election? What's that going to achieve in the time that we have left? So really the uncertainty grows, which is really what Brexit has caused. And you'd think at this late stage, by the 10th of December, that we would have a bit more certainty about March the 29th next year. Well, we don't. Anyway, let's go through the data. Like Canada this week, following the non-farm payroll week last week, the US-China trade war seems to be more important to global markets than some of the data, really. We've discussed the bond markets and how they are signaling a potential recession in the US, the jump back in oil prices, all these things affecting the markets, not just data. But let's have a look at it. So Monday, we have already had this out. I might as well just refresh the chart. So very disappointing number on the manufacturing production data. Not just manufacturing, which is 20% of our economy now in the UK. The services are a lot more important. We hear that retail sales in November, as reported by Springboard, this research company, saying it's the worst high street sales for 10 years in November. So it doesn't make very good reading this morning for the UK. So perhaps overshadowed by the Brexit manoeuvrings for tomorrow or Tuesday's vote, but not great reading. Tuesday we have UK average earnings still remaining maintaining growth of sorts, which is the only positive thing I can see around for the time being. The Brexit vote is listed here. There is no time. The timing on this is not exact, of course, but it's expected to be late in the day on Tuesday around 7 p.m. We believe it's going to be around 7 p.m. We then have US what's called producer price index. It's the cost of goods and services going into production. It's like a precursor to the CPI inflation number. Slightly soft number forecast there. And then on Wednesday we have the real thing. Consumer price index in the US 130 on Wednesday. It's the core number we should be looking at, plus 0.2%. Still nothing to get worried about, bearing in mind we have a very tight labour market in the US, and the Fed seems intent on raising rates this month. Anyway, that's that. Thursday, we have two central banks, the Swiss National Bank and the European Central Bank, both expected to leave monetary policy unchanged. The European Central Bank, hopefully in their press conference, are going to provide updated economic forecasts, etc., but we don't expect too much in the way of fireworks from the ECB on Thursday. And then Friday, we finish the week with what used to be quite an important number, core retail sales, but with everything else going on, it's likely that any announcement or comments from the Chinese or the US regarding this Huawei official and anything to do with the China-US trade war will have a lot more effect on the markets. So core retail sales expected plus 0.2%, which is a pullback from last month. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.